Have you ever wondered what a wealth strategist does and whether or not you need one? If you've ever thought about it, today I'm actually going to walk you through what I do. Well, some of what I do with my clients is we actually work to build what I call liberated wealth. And liberated wealth is not just about the number in your bank account, it's also about your greatest, biggest asset, you. Making sure that as you're building that wealth, you are in a place where you can exhale, feel in control of your money, and most importantly, enjoy what you are building. Hey, I'm Alex Davis. I am a liberated wealth strategist. I spent over a decade in public accounting, working with high net worth individuals and small business owners. And upon starting my own company, I realized there's so much about money and business that they just do not tell us. And if you do not get locked in with proper support and really be able to understand, ask questions, and be supported on your wealth building journey, you'll be out here on your own. And so I've used these skills as a CPA and certified financial planner to help high achieving women entrepreneurs turn their money into actual lasting wealth that they can confidently hold, grow, protect. So around here, we're all about building liberated wealth because it's not just about the number in your bank account if you feel like crap. There's a lot of wealthy, miserable people. What is the point? No, these parts, it's about, like I said, being able to breathe, be able to feel in control of your money and really build and live the life and legacy that you are building and enjoy it. So with that being said, today I'm actually going to walk you through how I review tax return, because you may think, oh, tax return, you're just looking at taxes and wanting to minimize taxes, which is absolutely true. Because around these parts also, I'm all about, listen, we're going to give Uncle Sam his fair cut, but we're not overpaying in taxes. The IRS and Uncle Sam, they don't know what to do with their money. Why the hell would you want to give them yours and mess it up? Absolutely not. So we're going to minimize it for sure. But in addition to that, there are so many things in a tax return that goes unseen if you are not looking for it. And so what I pride myself on is being a holistic wealth strategist, that I'm actually able to get in there and see, okay, I'm not seeing this thing. It may not be a problem, right? But now I'm going to ask questions so I can actually understand what's going on. So that way, if there's a way for us to either stop a money leak, or can we be leveraging that and growing and building that money faster, let's do it. So I'm going to share a screen. What I'm sharing is actually a tax return that I reviewed for a client, and it's all redacted for security and confidential purposes. But I thought it was a great example because me reviewing the tax return and what I was actually able to notice because of just looking at that tax return, it brought up awareness that she was like, I never would have thought about that. I have the CPA. She did not have a financial planner that really did the holistic planning. A lot of times I'll have clients who get insurance agents and they think that that's financial planners, and really they're just selling them insurance. And so even just knowing the difference in that was something that came up while I was reviewing the tax return. But it also made her think about other areas where she can invest. But I'm gonna quit talking and I'm gonna show you. Okay, so let's dive. I'm about to dive. Look at that. Y'all remember that? Okay, anyhow. Let's get into it. Let's get in. So what you'll see here, the first screen is a comparison between the different years. Why I absolutely love this page of a tax return. And if you do not have this page, if your CPA is not going over this with you, you need to ask about it, because looking at this gives you so much information, and then you can actually start thinking about, okay, do I feel the way this looks? So let me give you an example. Between the 2 years, if we look here, the salaries increased almost $41,000 or $40,000. So immediately we can start thinking, ooh, did it feel like my investments account grew? Does it feel like I maybe went on more vacations? Did it feel like I said yes to more things? Did it feel like there was progression in some area? I would expect to see progression because the income has gone up. I would expect to see that, right? You see that? I noticed the interest income went down. So now I'm thinking, okay, what happened there? Now these are not large numbers, but this is telling me either interest rates went down or the balances in the account went down. So I'm already thinking about, okay, what's going on here? Pension stayed about the same. There was less of a business loss. Now, immediately, some people may be saying, "Oh my gosh!" And so let me give you a little background on this client. This client was actually in the position by the time we started working together to transition into the business full time and lead a very lucrative career. This is a double income. She was married, so these is two salaries in here and some pension from the husband. But this is not necessarily a bad thing, because if you actually start thinking about it, if my salaries are W-2, there's not much that you can really do with tax planning with a W-2. You can make some retirement contributions. You can leverage things of that nature. But if you don't have a business or some sort of investment, the IRS does not favor W-2 employees. That's just how it goes. You get your itemized deductions and things like that. So it's super important to, like, how else can you reduce your taxes? And a lot of times, especially if you have a side business, this is a time where I say, if you're working full time, now obviously speak to your financial advisor, your CPA, but if you have legitimate business expenses that you can leverage and go ahead and do that while you're working, because then you're reducing your overall income. Now, there's an asterisk here. Make sure you, one, have the finances to actually take the deduction. Don't just take a write-off to save on taxes and now you're broke. I'm not saying that. But if you have a surplus of income and now you really want to make some investments in your business to start, do that. Now, another little caveat, don't do this too often. And then if you keep showing losses, you have to actually show that this is not a hobby, things of that nature. But this isn't a video for that. It's just something to keep in mind. But that is why having a wealth strategist, they're able, I'm looking at all of this and understanding, okay, is there a legitimate reason for it? Does it make sense? And then actually, how do we protect ourselves? Should an IRS agent ever come in, or should there ever be an issue? How are you protecting yourself? I'm really looking at things from all sides to not only, yes, get the best impact, but also make sure that you are protecting yourself. So that being said, you can actually look and see year over year income. There's a net increase of income of the almost $56,000. So if I've got an extra $50K, I'm expecting that I probably was able to leverage those funds in some kind of way. Now, if, as I'm talking to my client, if she's telling me, "Oh gosh, no, this has been very, very strained financially, and all of a sudden you have extra money," then we automatically know that this is not now just a tax issue. Now this is what's going on in your personal finances. Now we may have to get into some budgeting. You have to start identifying, where is the money going? Where do you want the money to go? Because if you're feeling that angst, usually that's because things haven't worked out the way you wanted it to, type of thing. See? Okay. Itemized deductions. What I'm seeing here is there are taxes, but I'm not seeing any mortgage interest. I'm not seeing a lot of charitable contributions or anything like that. And that's not a problem, but I'm going to want to find out, is there real estate owned? Because when we talk about building wealth, we're talking about also building assets. And if I don't, and not to say like you could have a home paid off free and clear, but I'm going to ask and find out, because I want to know, what assets are you holding as we're building wealth, especially since there's such a high income here. This is a high income. Where is the money going? And I'm seeing this literally just from this page. And then I would just want to find out, based on what their goals are, do they desire to be charitably inclined? Because I'm noticing that, there's not very much going to charity. At least that was reported. So I want to get an idea of what are their goals. So that takes care of that. And then I'm going to just keep going. And the other area where I, of course, want to look at is, I noticed that this is their withholding that went in, that they withheld through their W-2s. Well, it did increase over the year, so that's perfect. But then when I get down here, how much tax was owed or refund, they actually ended up owing $7,000. So that tells me a couple different things. One, it may not necessarily be a bad thing to owe. And the reason I say that is because if you've used those funds throughout the year and you've invested it into things that are going to give you a higher ROI than prepaying it with the IRS, I'm going to say, listen, if you can back it, again, speak with your financial advisor. This is not my financial advice to you, but these are the conversations that, as a holistic wealth strategist, I am having with my clients to say, hey, before we just say send this off to the IRS, because basically you're prepaying. The reason I share that with you is sometimes people get so, oh my God, I didn't pay my estimated payment. And perhaps depending on your situation, the estimated tax payments and the penalties associated with it, they vary depending on the prior year tax and things of that nature. So there are all these different kind of rules to follow. But if you prepay them, you're letting the IRS hold on to money, and you may or may not owe that amount. And so what would it look like if you knew that the money you were keeping from the IRS was actually going to make you money at a much higher rate than not paying them? You're going to go ahead and say, well, let me just go ahead and hold on to these funds. So owing tax in my world is not the end of the world. It's what is the intentionality behind it, and were you operating with intention to begin with? And did you know the pros and cons of not sending in your payment? Did you know? And do you know why you owe? You want to be able to identify, and what I work with my clients is see, well, wait a second. Did you owe because you actually just didn't send in enough payments, or did you under withhold? And oftentimes I have found that if you have a W-2 role and it's not really business where you are in control of sending in your payments, if it's a W-2 withholding, usually this is something you need to communicate with your payroll department and ask them to increase your withholding. That W-4 form changed and is actually very freaking confusing now. And it's not just a matter of saying, oh, I have this exemption or that exemption, especially if you have other income. So it's really important to actually check in and see what is your withholding rate. And you can do that very easily by just dividing your withholding. Take your withholding and then divide it by your salary. And you're going to want to do your taxable salary. That's going to be the best way to do that. Your actual taxable salary, and get whatever that rate is. And so, for instance, if you divide that and you realize, oh, I'm only withholding at a 10% rate, but I should have been withholding at a 20% rate. Well, duh, of course you're going to owe. So now what does that make me look to see is, okay, are you under withholding? And if you're under withholding, that may not be an issue if you're using those funds to make more money and you're getting a higher return. I'm going to say rock it out. Pay them people in April, you may have a little bit of penalty. But if you're telling me, well, I'm getting the extra money and I'm kind of just splurging and I'm not making money from it, and I don't need it to supplement my lifestyle, I'm going to say, listen, get with your HR department so that way they can go ahead and clean this up. That's what we have to do. We have to go ahead and clean it up. Okay. You see how listen, I haven't even gotten into actually looking at the tax return yet. This is just information that I'm already starting to jot and make notes about to have these conversations. Because guess what? This is going to tell me, right? I've seen that now that there was tax owed. Now I know that I'm going to find out, okay, are they under withholding? But if they're under withholding, that means if I have them change it, they will have less take home money. Now I need to know, based on their budget, their expenses, their lifestyle, their goals, are they going to be okay with losing this $7,000 that they're going to have to now withhold? Are they going to be okay to lose that amount? And some people, it's like, oh yeah, no problem, because it'll be $7,000 over the year. They may be fine. But for some people, they may say, now look, I got to listen, I can't do that math that fast in my head. So 7,000 divided by 12. But for some people, that $583 may be, oh, well, no, actually, I have a child that's in gymnastics, and this gymnastics is very important to me. I can't afford to take her out of this right now. I would rather keep the money there, understanding that, oh, I may have to figure out something else for this extra $7,000 if there's going to be another shortage. Make sense? Okay. So, like I said, these are just some of the things that stood out right away. So, drop in the comments if you're following along and you got to this point. What has been your biggest takeaway so far? Have you ever looked at your own tax return in this lens? Has your CPA or financial advisor ever kind of made you think about things like this? And go from there. And so that's the first screen that I look at. And then I get down into the actual tax return. And again, I look at this page and I say, oh, making a nice salary here. But then here are going to be some areas for me to now see, well, wait a second here. This is a nice size salary. You know, I want to find out, okay, how long have you been making this type of income and things of that nature. But what I don't see is I don't see a ton of interest. There's some interest, but not a lot. And I don't see any qualified or ordinary dividend. So basically, there's no really like stock investment going on. And everyone is different. Some people, especially if you have W-2, sometimes you choose to just put everything in your corporate 401k. That's fine. I would be able to actually look at the W-2 as well and see, okay, how much is getting put away in retirement, so I can find out what's going on with that. But the reason this sticks out to me is I'm a certified financial planner. And so I'm very much all about holistic wealth, and stocks is a part of that. Like, we really want to make sure that we are diversifying ourselves, and it just really helps with that protection. So I'm going to want to find out, and again, it's no problem because some people may favor their investments being in gold, precious metals, real estate. Some people are building businesses and that's where they're putting their money, and that's part of their retirement and wealth building strategy. That's fine, but we need to have the conversation. So this now sparked me to have the conversation to find out, hey, what is your investment strategy? Do you have one? Are you working with someone? Do you have anything against the stock market? And this is when I've had clients, be very candid and say, you know what? No one's ever talked to me about it. I've kind of just been leveraging my savings account, or I just use my 401k, not realizing that there are other opportunities to actually build wealth. And it's just a level of getting comfortable and understanding it. So this actually allowed us to start now having this conversation, which opened up who is her financial advisor to now have the conversation of, actually, I think where you're at, you're probably going to want to get someone that is more well-rounded and can give you more options, especially as we start looking at you saving and building to exit your corporate career and making sure that you are building your investment portfolio. But prior to that, she had not had these conversations. And I will say, most CPAs, they probably aren't going through and looking at your tax return like this, right? And a lot of times, it's like you're literally paying for a tax repair. That's the truth. They're doing compliance. They're not really looking at high level. And even if someone's looking at high level tax strategy, they're not then bringing in your personal financial planning. So that's having a wealth strategist. We're looking at everything, because what I know is tax strategy is just a piece of it. Taxes is a lot of your income. So we want to make sure that we are being understanding it very, very well, but it's just a piece. We have to look at your other areas, your cash flow, your personal spending, like having a spending plan, knowing what it is, your personal goals. That's actually really big, because that's going to dictate a lot of what we're talking about here. So, but looking at that, being that I saw those were blank and this was not very high, the other thing that stands out to me with this being like this is there money, but it's sitting at your regular schmegular savings account. This is not a high yield savings account. And sure enough, when I spoke with her, she did not have her funds in a high yield savings account. So that's the other thing that stands out when I'm looking at this. I'm like, oh, they probably don't have one of those. So I can now have that conversation, and easily, depending on what the balance is, that's another few $100s a year. Okay, so that's what we look at that. I kind of already talked about the overpayment and how underpaying. The biggest thing though is if ever there's a refund, we definitely have to adjust, because there ain't no way in the world you're sending the IRS and letting them hold your money at 0% interest. They're just holding your money. Absolutely not. So that's where I draw the line with my clients. I'm like, no. We need to shift your withholding. So that was just a little bit about that. And that was literally from me looking at a summary screen and page 1 and 2 of the tax return. And why, you may want to know, well, I don't know if I need a wealth strategist. If you have not had someone who has totally looked at your full picture, looked at all the different avenues, starting from what your goals are, what is it that you actually want, what are you building towards, what's in the way, and then actually mapping out a plan based on that, that's when you really need that strategist. Because if you only have a CPA who's only looking at one area, or you have the financial advisor who's looking at insurance or looking at investments, but no one is connecting the dots to make sure you are actually maximizing the money that you're making and actually understanding, well, wait a second, is how you're working, does that actually work for you? Do adjustments need to be made? Like, you as a person, are you being tended to? Because there's nothing worse than having your eye on this plan of, this is the plan, I'm doing it, but you're miserable the entire time. Or you realize that's actually not the plan, but I don't have anyone else that I can talk to figure out what can I shift and do different. So you hire a wealth strategist when you're like, listen, you hired me. Let me just speak to that. You hire me when you're like, listen, I have a CPA. They are not speaking my language to where I understand exactly where I'm going. And it actually feels good to me. I'm anxious at night. I'm not sure what's next. And I want someone to give it to me, give me the full picture, let me know what's working, where can I improve, and then how do I do it? And then depending on how clients decide to work with me, I work alongside them, because it's like great to have a plan, but then what happens when the gremlins start coming up and the voice is, well, you're already doing so well. You think you should do even better? Yeah. Because here's the thing. None of us are given visions of a life, of a business, of a career. We don't get visions that are not possible. They can happen. But oftentimes, especially you, my clients, we feel like we have to figure it out ourselves. You figured out so much already. You don't have to keep figuring it. Or you feel like, I've hired this person, they're not doing it, and like, I'm not sure where I'm supposed to go. This is why I love what I do, because I'm not someone's CPA anymore. I'm not just someone's financial planner. No, I'm someone who, listen, let's strip all that away. It's me and you. What is it that you need and what is it that you want? And without any judgment, without any emotions behind it, we're looking at the data, and I'm just looking through to see, okay, where are the leaks, where are the problems, where are the opportunities that are to get you where you want to be that much faster, but also in a way that does not break your spirit. Because too often I witness women build businesses that they hate. They're financially lucrative, they're building legacy, but what they've done is they were on some raggedy foundation, and now they just built a big business on top of that raggedy foundation. So when things start to crumble, when things start to not go so well, and that's just life. Nothing is roses and candy and sunshine all the time. It's just not. And that's the truth of it. It's not always rainbow and candy. But when you have that type of raggedy foundation, sometimes it's the smallest little thing that then it crumbles. And I'm catching women before that happens. I'm like, hey, you don't have to do that. And it's not about burning something all the way down, but it is about, well, what is the actual problem? Let's actually see it, fix it, and then you ride off into the sunset. I lost my train of thought there for a second, because I get so passionate about this work that I do, because the women I work with, like, we are freaking powerhouses. We are breaking generational patterns that have held back so many of us. And despite everything that we've been through, we keep moving. And I think sometimes that's the issue is we just keep moving. We figure it out. We figure it out. And it works, right? You can hustle that way. You can bear gritted that way, but our body keeps the score. The body keeps the score every single time and twice on Sunday. And you keep pushing and you keep going. But what's at stake? Is it your family life, spouse? Is it the children? Is it the people that you work with can't stand you because you're always nasty? And the saddest part about it is you aren't that way. You aren't that way. And maybe it's like everybody else gets the great you. This is someone needs to hear this. Your children get the best of you. Your spouse gets the best of you. Your coworkers, your employees, everybody gets the best of you. But you know who doesn't get the best of you? You. You said you wanted to work out. You said you want to get your skin cleared. You're like, oh, this is the year I'm going to work on my skin. This is the year I'm going to take care of myself. This is the year I'm going to hire that therapist. This year I'm going to hire that fitness coach. This is the year I'm going to hire that financial coach. This is the year I'm going to take my vacation. This is the year. This is the year. This is the year. And you get to the end of the year and you look back and you're like, whoa. Everybody around you, though, is living their best life. Living their best life. Meanwhile, you're the one heart racing, can't get sleep, stressed all the time, but you're in a season of growth. The money is there. You should be happy. Chances are there's something missing. And usually my clients come to me because they're like, it's my tax person. Oh, I just need to know where the money's going. And yes, you do. And that is why I work with the infrastructure. What are the systems? What are the strategies that you need? But I go a level deeper because the woman who built that business on hustle is not the same woman who's saying, you know what, I'm ready to enjoy it now. I don't have to be hyper vigilant. I don't have to control everything. I don't have to do it. Those two women are not the same. And your system, she doesn't trust the laid back girl yet. She doesn't trust her yet. She doesn't trust the one who just enjoys what she's built. No, she don't trust that woman. You. That's what she's saying. She's like, who are you? What? What are you talking about? I can't do that. That's identity work. And there are not a lot of financial professionals who even are aware that that is even a thing. But I am, because I walked through the fire of this identity work and I'm in it right now. I'm in it right now, fighting for my life, literally. I'm like, this isn't seen. Can't be seen. But I have to be seen. Because women are building legacies and they're doing it from unhealthy ways. And it doesn't have to be that way. It doesn't. Because when we are at our strongest, our fittest, as women, we naturally pour back into others. And you're doing so much now, and you're stretched to the max. Imagine what happens when you are giving from your overflow. That's good. That's good. But I just want to show you that. So if you have questions, you're wondering like, oh my gosh, I need someone to look at my money in that way. I need someone to talk to me and understand that way. Go ahead. Information is below. You can reach out to me. And also there's also a free quiz where you may feel like, I don't know where to start. You don't have to wonder. You can just take the quiz and see where your biggest leak is. And I give you tips for where you should actually focus your time and energy. Because the other thing, you have limited time, limited energy. Where do you want to start? But that's the beauty of working with me is you don't have to figure it out on your own. And even if you feel like you have because a lot of the women I work with, they have the professionals. Like I said, they have the CPA, they have the financial planner, they have the business coach, they have some even have the therapist, but no one is really connecting the dots. And what I love to do is get in here and say, okay, well, this is what's missing. This is how this person can help you. Like, and have specific focal points when you go ask them questions. And and understand, well, what should I look for with the answer? So you're not just, taking it and then not doing anything with it. So yeah. Let me know your biggest takeaways below. I cannot wait to connect with you and share this video. If there's a woman in your world and you're like, oh my gosh, you need to talk to her. Send send it send it their way. I was about to start singing again, but that's enough for now. Well, have an amazing morning, night, afternoon, whenever you watch this video, and we'll talk later. Bye.